How's it going, Portfolio Kings team? In this video, we are going to be going over the APLS Strangle that I posted last week. It was an insane trade that resulted in almost 50% return on capital in 3 days. On top of this, I will be going over 2 other potential trades that I have identified for you guys. If you're new to the channel, please be sure to leave a like, comment, share, subscribe. So here we have the APLS Strangle recap, 48.8% return on capital in 3 days. Last week I posted a video talking about APLS for a Strangle setup trade. I was talking about a 45.90 Strangle. I decided to move the put down to 40. So we took a 40.90 Strangle, which was opened on September 7th. We received $16.50 in credit, with an $1,800 in buying power reduction. We closed this trade 3 days later on September 10th for a $770 debit, which is a massive $880 gain, 48.8% return on capital in a mere 3 days. So high probability, massive gain in 3 days. This was an excellent trade. I'm glad I shared it all with you guys. Hope you guys got in on some of the action. Here's the order chain for APLS. As you can see, opened it up on September 7th in the morning at 8:50 for $16.50 credit, closed it 3 days and 3 minutes later for a nice $770 debit, closing $880 in profits. Here we have a chart of APLS. The red lines, as you see, were my break evens, and you could see that massive gap down was the morning of September 10th. And we stayed well within the break-evens, dipping slightly below in the morning and then coming back up right after. I exited the trade before it even had wicked down to my break-even. So what happened? APLS tanks on clinical trial results. Phase 3 trials are among the biggest catalysts for biopharmaceutical companies. These trials are considered to be the most crucial for gaining approval for specific drugs. Investors in APLS appeared to have high hopes for the company's Derby and Oaks study. This was further confirmed by the options market, which had enormous call skew, which we took advantage of. APLS took off from around $40 per share in April to around $65 in late August. However, results from the Phase 3 trials pulled APLS shares back down to as low as $27.50 on September 10th, 2021. We opened this strangle on APLS when the stock had an IV rank of 92. This means over the past year, relative implied volatility was higher only 8% of the time. IV percentages alone were at 181% for our $90 call strike and 272% for our puts. Following the trial results, the call implied volatility sank over 60%, while the puts lost over 200%. This resulted in an excellent trade for us that netted a return on capital of 48.8% in 3 days. Moving on to some new trade ideas here, we have Mrtx, Mirati Therapeutics. They currently have an IV rank of 75 according to Tastyworks, with an IV 30-day reading of 91.9%. One potential trade opportunity I've identified is a October 15th 150-140 200-210 Iron Condor for $3.35 in credit or better. I give this trade a B+ liquidity ranking. The short 200 call strike for the call side has 4,500 open interest. When looking at the puts, however, the short 150 put strike has only 112 open interest. So not terrible, but I wouldn't give it an A ranking. So here we are on Tastyworks. I have the Iron Condor pulled up right here. As we can see, we are selling the 150, buying the 140 for the puts, which is the 28 and 21 delta on the puts. And then for the calls, we're going out to 200 and 210, selling the 200 call and buying the 210 call for protection, 28 and 23 on the deltas there. Here we have the risk profile, and I am looking for a massive decrease in implied volatility. If we can get filled at 335 or better, that would be ideal, as we look for 1/3 the width of the strikes. And I give this trade a B+ setup, and I will look to deploy it at market open. Next trade idea that I have identified is Urnm, which is North Shore Global Uranium Mining ETF. Uranium has been an overlooked sector that has witnessed some crazy growth over the past year. Since the beginning of the year, Urnm has risen over 120%, with a 77.1 IV rank and a 103.9 IV 30-day reading. I've identified a high probability iron condor. 75.70 for the puts, 125.130 for the calls for the October 15th expiration. I give this underlying a C+ ranking for liquidity, as there's not a crazy amount of open interest relative to Mrtx. Aim for $1.65 or better in credit, again looking for 1/3 the width of the strikes or better. Here we are on the options chain, as we can see, selling the 75 put, buying the 70 for protection, selling the 125 call, buying the 130 for protection. Pretty much delta neutral, some slight bullish deltas. Looking for $1.65 in credit or better. Let's take a look at the risk profile right here. So we have the risk profile pulled up right here, and as we can see, we are protected for a massive move. There is plenty of volatility to be sold on this underlying, and I am excited to place this trade at open tomorrow. Thank you all for tuning in to this recap video, plus these 2 new trade ideas. I hope you guys learned a lot. I hope you guys got in on APLS last week, because this was a killer trade, high probability setup with amazing profits and amazing return on capital in 3 days. Thank you all for tuning in. Hope you enjoyed this video. Hope to see you in the next one. Again, please be sure to leave a like, comment, share, subscribe, and most of all, happy trading.